Oil went through $100 this week, and if you live in the Gulf, that number cuts both ways. Good news for the economy you live in, bad news for the one you send your money to. The world's biggest tech companies lost close to $800 billion in a single day. Turn out building AI is a lot more expensive than everyone assumed. India fell 5 days in a row, and almost none of it was India's fault. That's the one I really want to get into today. Watch until the end. I will tell what to actually do when the news look like this. Welcome back to Chai with Siddick, your weekly market wrap for NRIs investing from the Gulf. Grab your chai. Let's go. This was one of those weeks where you look at the scoreboard and everything is red except oil. Every index we track was down. Oil was up sharply, and once you understand that one line, the rest of the week explains itself. Starting in the US, the S&P 500 finished the week down about 1%. Given everything going on, that is honestly not bad at all. The Nasdaq 100 had a rougher time, down about 2.5%. Alphabet and Tesla both reported and both got punished. Not because the numbers were terrible, but because investors were getting nervous about how much money these companies are pouring into AI infrastructure. On Thursday alone, the big tech names lost close to $800 billion in market value, their worst single day since April last year. Coming to India, the Nifty was down 1.75%. The Sensex a shade under 2, 5 losing sessions in a row. India's worst run since the first week of January. The rupee was basically flat against the dollar, barely moved. Hold that thought because it matters more than it looks. And then oil. Brent was up more than 8% for the week and crossed $100 a barrel on Thursday. First time since May. It did slip back below 100 on Friday, falling almost 4% in a single day. But the damage was already done. So why did oil do that? Two things, both in our neighborhood. First, Iran has been stepping up attacks on tankers in and around the Strait of Hormuz. That narrow stretch of water, roughly a fifth of the world's oil, passes through every single day. Second, and this is new, this week the Houthis in Yemen opened a second front. They declared a maritime embargo against Saudi Arabia and fired on 2 Saudi tankers in the Red Sea. And it isn't only the Middle East. Over in the Black Sea, tanker attacks forced the Caspian pipeline to stop loading. That's around 80% of Kazakhstan oil export offline. 3 separate checkpoints under pressure at the same time. The market isn't pricing in one problem, it's pricing in the chance that this keeps going. Then on Friday came reports of Pakistan pushing for fresh US-Iran talks with China backing it, and oil dropped almost 4% on that news alone. That tells you how jumpy this market is. Not a deal, just a report that talks might happen. Here's why this is India's problem more than anybody else. India imports around 85% of the crude it uses. So when oil goes up, a chain reaction starts almost automatically. The import bill goes up. The trade deficits get wider. That puts pressure on the rupee, and expensive oil feeds straight into inflation, which makes it harder for the RBI to cut rates. That's the whole chain, and it's exactly why auto, metal and energy were the weakest sectors in India this week, while IT actually held up. HCL Tech and Wipro were among the gainers on Friday. Now, remember I said the rupees was flat, and to hold that thought, with oil up 8% in a week, a flat rupee is actually a decent result. But if oil stays near 100, that's the pressure point to watch. And foreign investors pulling money out of India is what would make it move. So what does all this mean for us sitting here in the Gulf? You are in a genuinely unusual position, and I don't think enough people appreciate it. Expensive oil is broadly good for the economy you live in. Government revenues here go up. Project spending goes up. Hiring tends to hold up. Your job, your salary, your business, all of that sits on the strong side of this trade. And expensive oil is bad for the market you invest in. Indian equities get squeezed. The rupee comes under pressure. Think about what that combination actually hands you. Your income is strong at exactly the moment Indian assets gets cheaper. And if the rupee does weaken, every dirham you send home buys a little more. More investors in the world don't get that setup, but it only works if you actually keep sending the money. This brings me to what I really wanted to talk about this week. I know some of you are looking at war headlines and thinking, let me just pause the ship for a couple of months. Let me wait for things to settle. Let me hold the cash and see what happens. So let me tell you about August 1990. Iraq invaded Kuwait. Oil nearly doubled in about 10 weeks. The US market fell roughly 17%. And for our community, this was never just a market story. India airlifted more than 170,000 Indians out of Kuwait. 488 flights in 59 days. It is still the largest civilian air evacuation in history. If there was ever a moment where stopping felt like the sensible, responsible, obvious thing to do, that was it. Now watch what actually happened. The war formally began in January 1991. From the day it started to that June, the US market went up 20%. Read that again. The market bottomed while the news was still getting worse. It recovered as the war began, not after it ended. Nobody rang a bell. And anyone who stopped investing in October 1990 because things looked frightening missed the recovery, then had to buy back it at a higher price. Here's the part that applies to you specifically. You are a salaried investor. Your salary lands in your account every single month, whether the news is good or bad, whether there's a war or there isn't. That regularity is your biggest advantage. It's the whole reason SIPs work. Every month you keep investing through a scary patch. You are buying more units for the same money. Pausing doesn't protect you from anything. It just quietly hands you best advantage back. Remember, markets don't pay you for predicting the war. They pay you for still being there when it ends. That's the week. Everything red except oil. India on its worst run since January, and $100 barrel sitting right in the middle of it all. If this was useful, hit subscribe. It genuinely helps a small channel like this one. And this is episode 10, so we are only getting started. Same time next week. Raise your chai.